The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the DAX like we usually do. As you can see, this has completed a perfect ABCD Gartley pattern. Spot on at the 61% retracement. Hasn't gone too much higher than that. But the most interesting one, I believe, is what happened last night in the futures for the FTSE. Let's just bring this up here so you can take a look at it. This is the chart. If you'll look at this, this will be a this is only a 15-minute chart, but you can see the huge gap up opening that we had here on the FTSE. And this was from one of our friends over in Scotland. And he asked the question, can I short there? And my answer to him was, yes, you can, because you know exactly what your risk is. If it breaks into new high ground, you're most probably wrong, because it does complete a nice pattern. So you've got several ratios to base that on. The $64 question is, how much does the gap really mean? And we don't know that. But later on, as you'll see here from our good friend in the UK, another friend sent this over, and you'll notice that we went up and completed that ABCD up there at that 76.30 level, and it proceeded to drop down into that zone. So this is going to be very interesting. Now remember that the FTSE has made a 50% retracement of the high from August, whereas the German DAX has made a 61% retracement. So it is the same patterns, but just different ratios, and that's what we're trying to determine, which one of those ratios is going to mean the most. We don't know until the market, of course, tells us. Hold on one second, please. Okay, let's, we got a couple of big patterns happening, folks, that we've been talking about here for quite a while. The euro is still moving up, but let's take a look here at this Canadian dollar versus the US dollar. This is one that we've talked about here for the past couple weeks. We had a beautiful 135 pattern here that started, back in June, and look where we're coming down now to at the 128.60 level. We're going to be looking, we're only 40 pips away where the ABCD comes together. At that point, it's also a perfect 61% retracement coming off of the April low, and it would also be a 50% retracement coming off the February low, and it'll be a 382 retracement coming off the September low. This is a really important number here at 128.60 coming down here on this Canadian dollar. This is going to be really interesting. We'll follow through with this tomorrow to see what happens, but the D level comes in right at the 128.65 level. So keep an eye on that one. That's one that's completing. There's a couple others that are looking very, very interesting. Last night we had a very interesting move in one of the markets that we've been waiting for a very long time, and that is the wheat market. We'll bring this up here to show you. This was last night, the wheat got down to the exact 61% retracement at 518.5. Let's try that again, Larry. The 78% level, and we rallied up to 529 so far today. So if you were in that, we sent a video out on that when it was occurring, and if you happen to be in that, make sure that you put your stop at break even, because you now have a $500 profit in it, and you certainly don't want it to go to a loss, because now your risk is zero, and you don't want to go back to a situation where you have to go negative after making some money. That's just basically what I think is common sense. Take some money off the table. The other thing that's interesting about this, if you take some time and do the work yourself, which I think is always good, as Jim Twentyman says, if you look at the high that we made in early August, and then we went down to the 50% retracement, and then we rallied up, to the 50% retracement, but look at the move between AB and look at the move between CD. They come in, if you count the number of days, it's 8 days down. We're in the 8th day today, so pay attention to that. Maybe there's a little similarity that happens in these markets that repeats over and over again. So I think that's something that is relatively important. We have something else that's really important today. We're reaching a very, very critical level in the euro, but I want to, I think I have time to probably do the euro right now into the break. Let's just see if we can get this up here to let everybody see it. I think this is it. There we go. Let's get this up here. This will take a little bit of time. Okay, we made the big 1.618 expansion down there at 113. But look what's happened, folks. Since that time, we've gone straight up, basically from 113, we're at 117. We've gone 4 handles up in 8 trading days, okay? Now, you'll notice right above here at 117.30, we're looking at a 78% retracement of the move that went all the way back to June. So that's an important number. But look at the retracements that we've had during this time. Each one of them has only been 382. In fact, the one last night was only 382 that went down to 116.75. That means when we get to this level of 117.30, that's going to be a very important level to look at. We've been as high as 117.20, so we're very, very close. But if we close above 117.50, this is extremely bullish to the euro. But right now is the area where we probably should get a sell signal, because the reason, not a sell signal, but a pullback. And the reason why is you're up 8 days in a row. That in itself has a high probability of seeing a correction. I would think that the correction would most probably be a 382. So if you've gone up, 400 points, and you did the math on that, 382 of 40 would get you down at least 150 points. So from 17, it'd get you down to that 116 level, 116, 115, 90 level as a very, very important support point if it starts to act like that. If you get the videos from me that we send out on this each day, you'll see it forming as we go through it. But that's what it looks like right now. That should also affect the gold market a little bit, because they've been running hand to hand, and there should be a little bit of resistance at the 1220, 1222 area, 1220 to 1222 level in the gold. That's another one that looks really interesting today, but that's a really important one. When we get back from the break, I would like to show you the soybean market, because we have 3 major grains. I'm going to let you do the work yourself on the corn, because we already bought that. That's starting to work okay. And the other one we're going to watch is the November soybeans, because if you like ABCD patterns and you like the ratios and you like the similarities that we see in some of these markets, you're going to like to see what this soybean chart looks like, because it's had one heck of a move to the downside, and it's at a point where it could easily move. And if they're making deals in Mexico and they make one in Canada, guess who's next? So who knows, maybe they'll be doing something with that. But anyway, the deals seem to be working in our favor, and the market continues to go higher. So we'll see 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're going to take a look at this November bean chart because it gives a lot of information. If you'll notice the time between March and the end of May, look at the number of times that the November soybeans tried to get above 1060 a bushel. 1, 2, 3, 4, 5, 6 times. The last being, of course, during the Memorial Day weekend when the Indianapolis 500 had one of the hottest days. I think it was since 1937. And you'll notice that soon as the rain came, the market started to break. And as you can see, it went through the 61% retracement, the 78% retracement, and kept going to the bottom. The key here is Cy Monley at Sylvius Financial. He hedges crops for farmers, and if the farmer wasn't hedging up in this area, which most of them must do because of the banking loans that they get, that they have to hedge their crops to, make sure that these loans will be paid, the difference would be about $40,000 for each farm. So that's a huge amount. But look what's happening to the soybeans right now. We are completing an A, B, C, D pattern just like we did in the wheat. We've rallied about 13 cents off the bottom here in the beans. So at this level that we're looking at 838 in the November soybeans down there, that is a complete ABCD. If you look at it, it's a perfect Gartley, and Gartley said if you buy the first ABCD in a bull market, but this is far from a bull market. So if it is the start of a bull market, it's a great spot. So the thing is, it's a very low risk at this spot. But in order to really get a feel for it, just do the corn chart yourself, folks. The corn is a real easy one to look at. Look at December corn, and you're going to see the same pattern that we're seeing here in the soybeans, the same pattern that we're seeing in the wheat. The ratios are different. their actual, the ratio on the corn comes in at the 60. No, they're all right. They're all come in at the 78% level, corn, wheat, and beans. And so whether they're going to hold or not, I don't know. But this is a pattern. This has nothing to do with the news, has nothing to do with tariffs or anything like that. This is the actual buying and selling during this time, and that's what we're looking at as far as something to sort of hang your hat on as you begin to look at what's going on. Now, I got several emails about the stock market. As you know, I was expecting the market to be up on Sunday night and Monday, but I didn't expect it to be up as much as it was. If you remember, I said if it was up more than 350 points in the Dow and 40 points in the S&P and some ungodly number in the NASDAQ, that would most probably be another day or two up here. And I still believe that. And if you take some time and look at the IWM, because all the IWM did was go up and make another 1.618 expansion, and it was it didn't actually close that well. It closed in the lower part of the range. Whether that means anything or not, I'm not sure. But all the patterns that I'm looking at, they haven't changed at all. The movement that we had yesterday, doesn't mean a whole lot. Now, one of the things that they're asking me this morning here in the den is about the gold. We've been very I haven't done silver yet, Mike. I'm going to do gold and silver right now, so just bear with me here. I'm going to do gold right now. You'll notice that we have an ABCD structure here in silver that could get gold that could get us up here to the 1230 level. We've already gone more than $50 an ounce off the bottom, and that's really bullish, folks. If you look at the gold chart on a daily basis, I just want to show you that this is really I get too excited about this. I better sit down and be quiet. Not good for my old man's heart. Look at the move that we're having here in gold off of the 78% level. Look at this move, folks. We've moved almost $60. Let's see, $50 off the bottom. Look at the low in December of 2016. Look at that low, and then look at the low from June of 2017, and then look at the low from December of 2017. You see the strength in this one right here? Part of it is that it's so very, very oversold. We only had 6% bulls down there, but now some people are trapped, and we're starting to see increases in open interest, and that's what that's what you're looking at. You're right, Mike. I do have some enthusiasm for this, and sometimes I stay up all night doing it, but been doing it for so long, I don't know any difference. Back in the days when we didn't have, electronic trading and stuff like that, everything was done by ticker tapes. No one ever did any day trading. The only way you could do day trading was to write down the numbers and put them on a piece of paper and graph your own charts. It wasn't until about 1981 when ADP, American Automatic Data Processing, came out with a machine that actually gave you information on intraday prices from the exchanges. But each one of those printouts was $10, and that was a lot. That was more than the cost of a book. So if you wanted 10 charts, it was going to cost you $100. Conti Commodity had one of those in the office there, and believe me, they took in a lot of money because everybody wanted to see what they were doing on those. So that's pretty much what we're looking at. So we'll see. Anyway, I don't know what that private message is about, TFNN. I'm sorry about that. Anyway, let's take a look at one other market, and that is the silver market. The silver market is not moving nearly as rapidly as the gold, but I think eventually we'll see that occur. That's got a we were looking to buy it down there, of course, at that 1445 in the Christmas silver. It's had a pretty good run. I think it's just starting. You have to just hang on there and see if it's going to keep going higher. Whether it will or not, we really don't know. The key one today is the euro, because the euro is up against, we had an 8-day rally. We're up against this 117.30 level. That's going to be really important. And the other one, of course, is the stock market. Is it going to continue rising, which it certainly can without any trouble at all? but sometime in here, maybe in my lifetime, maybe not, we will see whether it's going to be looking at. And also the Canadian dollar. And well, all of these currencies are at a real interesting level, so that means U.S. dollar must be looking at the same thing. So that's another one that looks pretty interesting. Also, the Treasury bonds, folks. I still believe we got a chance to get up to that 148 level. Remember, we're going to be switching over here. This is the end of August, so we're going to be switching over to the December contracts here pretty soon. But we've got a pretty good chance here. We're at right now we're trading at 114.18 here in the Treasury bonds. That's pretty close to a 382 retracement of the whole move, and that's something that we want to keep an eye on here because that comes in right around 144.12. So watch that level of 144.12 because we're now down a little more than one handle off the high. The last time we had a one-handle correction was way back on August the 8th. So that's I think I can put this into the room without any trouble. Let's get this up here and you can take a look at it. There you go. You can see that 382 comes in at 114.12, and if you did the ratios on some of the other swings, you'll see that they come in pretty close to that level. So that's going to be really key support in these September bonds at 144.12. That's what it looks like from what we're watching here. But on the daily basis, that head and shoulders pattern still looks like it's in vogue from my point of view, and I think we could get there eventually, but maybe not today. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Caller from Florida. Mike, are you there?
Yes, I am, Larry. Larry, I've got a question regarding the dollar.
Yes, sir.
The other day when I was listening to Basil, he seemed to think that maybe we could have some kind of a support area in the dollar at 94.5.
I agree.
And maybe have a pause with gold. I had a short-term trade. I had some gold stocks, and I sold them, and I was trying to get back in. So do you think that maybe we could get a pause in
There's a
gold?
There's a very strong possibility if the correlation between the euro and the gold stays, and it's been staying pretty much the same. So I believe so. The area of this euro at this 117.30 level is very, very important. That correlates to that 94 and change level in the dollar index that Basil's looking at. The other thing, Mike, is that we're up, I believe, 8 days in a row now in the euro, and just being up 8 days usually means that you're getting ready for some type of correction. Larry Williams did a whole bunch of work on this about 40 years ago when computers were just getting popular, and the odds of a market going up 5 days in a row is like 80%, 6 days in a row, it's like 82, and it goes all the way up to 8 days. The problem is if you go up more than 9 days, you're in an outlier event, and you could go to 12, 13, 16, 17 days. So this key level that we're looking at here in the euro at 117.30 is very important. So, and we're seeing it in not just in that, but we're seeing it in the Canadian dollar, we're seeing it in the Japanese yen, we're seeing it in the British pound, the Australian dollar. All of them are lined up that the dollar could firm here. So whether that's going to happen or not, but it's a good question. We're right at that level. That's I have to agree with him. That 94 and change level in the U.S. dollar is going to be pretty important.
Yeah, he suggested 94.5, which we're on my chart. That's the area that we're in now. So
that's exactly the area we're in now. I think that the last price I saw, and it was really close to that level. So, and you have to respect Basil because he does some fabulous work, and it looks like there's some real serious support there in the dollar. But like we say, Mike, sometimes these things give way, and you can't stand in front of it. So below 94, you don't want to be involved in being long the dollar. That means the euro is going to be soaring way above the 118 level, and that could easily happen too. But right now we're at a real critical level. From a technical standpoint, I talked about the euro this morning. We've had some wonderful corrections here, very small ones, all 382, but we're right at the moment of truth right now, 117.30.
Okay.
So that's what I see.
And if we did get some kind of support in the dollar, and gold made a very short-term top, where would you think gold could possibly pull back into?
Okay,
and
that's a good point.
The gold trend still be bullish.
Okay, we had a $50 rally roughly in gold. So if you take $50, multiply it times 0.618, that's going to give you roughly a $30 correction. So if you get a $30 correction, which would take you down to about the 1180, 1190 area, I'd really like it down there. I think that would be a pretty good spot. However, if it's really bullish, and these on the daily charts look extremely bullish, especially coming off the 78.6, you only might get a 382 retracement, which will only be about $19. So watch that level of 1193, 1195, because that could be a real key level. I'm extremely bullish, both gold and silver, just because of the long-term charts and the way they've come out of here. Finally, I mean, it took a long time for it to finally realize that there was a chance for a rally, but that's what I'm watching right now, and I'm really waiting for the correction. I want it because that's going to give me an idea of what the next leg is going to look like.
Right, based upon the amount of pullback we get, correct?
That's correct, yes.
Yeah, well, like I said, I had a short-term trade. I sold some of my gold stocks, and I'm looking to get back in, so I'm watching it.
Okay, well, there's nothing wrong with taking a profit. So just, look for a good entry spot. And I think, one of the keys to look at, Mike, is the time it takes. If it only takes, let's say we've been up 6, 7 days in gold. If it takes a really quiet 3-day pullback and it's only to the 38% retracement, that's extremely bullish. So,
Right.
Watch the time that it takes to get there. Now, sometimes it might be a really sharp move down that maybe only happen 2 hours because of a report of some kind. But if it takes 3 days to get there, it's telling you that the market is extremely bullish and it wants to be moving a lot higher. So watch the time that it takes to do it. That's another factor to keep in mind.
Okay, well, Larry, thanks for everything you teach us.
Well, thank you. I appreciate
it. To everything I've already learned from Tom O'Brien and all the other contributors. So I really appreciate all the education I'm getting from all you guys.
You bet. Tom we all should take our hats off. And I can hear the sound of one hand clapping right now. But no, he's done a great job. He really has. He's the information that you have here and the seminars that they give and webinars they're top rate. So thanks for calling in, Mike. You call in anytime. We'd love to hear from you.
One other quick question, if you have time. Could you give us a short lesson in the relationship of open interest versus price of stock going up versus going down?
Sure.
I'd like to really try to learn that a little bit better. Thank you.
That's a real simple thing, and what I'm going to do here is I'm going to quickly go to hopefully into my my Dropbox, and I'll be able to pull this up here so we can I'll post it into the room, and there we go. We get it up here, and we'll be able to see it real easily. Hopefully, 1, 2, 3. Where are you? Okay, it'll be up here in just 1 second, and it's easier for me to talk off of the chart because it'll tell us that here we go, and all I got to do is expand it a little bit. There we go, got it up here. All right, this is basically what this means is when open interest is rising and prices are rising, the market is very strong. If the price is rising and open interest is falling, the market is very, very weak. And so those are the two that I'm watching. When the prices are rising and open interest is falling, the market is weakening. And if the market is falling and the open interest is falling, that means the market is strengthening because the buyers are leaving the market, and there's just nobody else left to buy, so the market's going to rally. So that's I hope you have this at home. If you don't, drop me an email and I'll send it to you. But
okay.
This is the factor that all these books are based on. And if the open interest is rising and prices are rising, like we're seeing now in gold, that's very, very important. So just recently, when we had a falling price and a falling open interest like we had in hogs, the market bottomed and it rallied 10 cents. So that's what you want to be looking at. So I watch that, especially as we reach highs and lows, because it'll give you an idea that you're really close to what we think is a turning point. But besides that, you have to have some good ratios and good patterns to tell you where you want to be as far as when you want to enter the market. That's the way I try to do it. And even with that, you're still wrong sometimes, so nothing you can do about that.
Okay. And
does that help?
One other thing too, Larry, are there any good free sites where you can get the finding open interest of different stocks?
Stocks don't have open interest, but commodity, just go to www.cme.com. They have it there. Everything's there. You got it right there. But
Thanks
stocks don't have open interest.
Appreciate it.
You bet.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, after we spoke from Mike in Daytona Beach, I wanted to bring up the U.S. dollar index chart. And as you can see, when we broke out of that upper channel, we went right to the major long-term 61% retracement on the weekly chart that we highlighted. That was just below 97. But where we are now, as you can see, I believe we went just a tad below a 94.50 this morning, and I believe that is exactly a 61% retracement off of that whole move. This is why it's at such a critical level right here. It needs to hold this level in the U.S. dollar index. That corresponds to the 117.30 level in the euro, and so all of this is really coming together. And the dollar index versus the U.S. dollar versus the Canadian, we're only about 20 pips away from the target that we talked about when we earlier this morning. So there's a lot of things happening with the dollar today regarding the yen, the euro, all of them. They're all very, very critical levels. So whether that means too much or not, I don't know. The stock market, we made a higher high than yesterday, so came pretty close to being up 300 points, which the area in the Dow that I was looking at was being up more than 300. But the one that I wanted to bring to your attention, and let's just see if it's still working, because yesterday it had a very unusual pattern, and that is the IWM. I want to get this up here to look at it, because it has made the 1.618 expansion. It's made the butterfly pattern, and it did make new highs, of course, but it hit that 1.618 expansion absolutely spot on at 173.23. We're trading a point below that right now, but that should be it, and we're up 10 days in a row I believe it's 10. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 9 days in a row yesterday. That statistically should be enough to get a little bit of a correction, but I believe this is a little bit more than a correction coming, folks. That's my 2 cents worth. So we'll not worry too much about what my 2 cents are worth, but we'll go from there to there, one thing at a time. The crude oil market. The crude oil market is having a little bit of trouble up here around this $69 a barrel level. I think that if we've been here now for several days, it's basically that $69 barrel is 69.05. Is right in the area of the 78% retracement over that range. If it gets above the 69.60 level, to me that means that it's probably getting ready to maybe make a new high. But we're not seeing that in the gasoline, nor are we seeing it in the heating oil, either one. So those are another that make us, wonder whether this is going to be a bigger move than that. Now, I've had several questions all about the hogs because we've had Rich Anderson on this program so many times, and I just wanted to bring to your attention here. This is I'll put up Christmas hogs, the December, so you can take a look at it. But we were very bullish this at the end of the week last week because we had a beautiful 6-day pullback right into major support, and we had a pretty strong move. The market was sharply higher yesterday. It's higher. It looks like it's higher again today. We went limit up yesterday, but we got a potential here for another 8 cents higher in the hogs, and that's not easy to do. But if we do get something wrong with some of these things with the diseases that is going on in China, that could very easily, get your hogs up to that point. I've gotten several questions more about my feeling on the stock market. Folks, I might be wrong by a day or two, but this is about as easy as it gets for me on technical analysis. I mean, I look at all this stuff. I can't see any difference. This market it's still quite weak. It doesn't really appear that this is not a breakout. If you just look at the New York Stock Exchange Index, versus the other indices, we were up yesterday, but it's certainly not a breakout. We're just a little above the 61% retracement on this, and we'll see. I'm wrong a lot, but this time I don't think I am. If we get another 150 to 200 point move in the Dow today, then I'd say, yep, I gotta call Uncle and say, Uncle, this is it. I'm wrong, and this market might go up forever. But right now, I think it's in an area where it's very, very vulnerable to a really severe correction, if not a major top. And I mean a major top. Where the VIX index should be trading with the Dow at 26,000? They shouldn't even be trading the VIX because nobody has any fear anymore. You think it'd be trading around 6, not around 12. That's another question that I bring to your attention. So keep in mind that these markets don't go up forever. When it seems like the only way up is up, then the only way up is down. So watch it. It's going to be very, very interesting to see. But we're having some pretty good swings this morning compared to yesterday. We had a 50-point swing here in the Dow just early this morning, but that doesn't mean a whole lot, nor does anything else because it's still up on the day. We need a move down of a couple hundred points in the Dow to make us think that, yes, there's a possibility that we've reached a major level in this particular one. So keep an eye on that. The sugar is acting nicely. Coffee is acting nicely. They've all made beautiful 3-drive to a bottom patterns and rallied substantially. So you want to have your stops at break even on those if you happen to do those. And just wait and see, what the next swing is going to be. The key ones to watch today is the currencies. You got to be watching that Canadian dollar. You got to be watching the euro and the Japanese yen. Those are all very, very important. And then also the gold. If the gold can't get above that 1220 to 1222 level, that tells us we're probably getting ready for a little bit of a correction in that. The grains have started to move in the direction that we had thought. So should not lose anything in either corn, wheat, or beans because they give you a little bit of a profit. And if they go below those numbers, you just can't stand in front of it. So just make sure you keep your stops working and all these things. Because if you don't use a stop, you're telling the market that you know more than Mr. Market. And believe me, Mr. Market doesn't like to hear that. So you're the one that has to take the responsibility for protecting yourself. And that's the key thing, to be looking at. And that's what I think is important. Now, I do have some good news from a guest standpoint. We're going to have our good friend Stan Harley's going to be our guest here on Thursday, and we're going to have some good conversations with him. And I'm trying to get our friend Bill Meridian from Cycles Research on towards the end of the month. Well, it's going to have to be Friday because that's the end of the month, if I can. But right now, I'm not able to get that. So we'll see if that's going to be the case as we look at some of these through the looking glass as we go through some of these things. So anyway, that's what we're watching here. And I think that, yeah, there we go. I thought I'd gotten knocked out of Skype, but everything's still okay. Okay, let's move on to one other question that someone is asking, and that is about the Dow Jones Transportations. We have not made a new top in the Dow Jones Transportations as of yet. We came very, very close yesterday, but we have not done that as of yet. So that is a possibility that double top that was here with the butterfly pattern and the 3-drive, all those are still in vogue. So unless it makes a new high, this pattern is still in effect. So let's take a break here, pay a few bills. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to just talk a little bit about what I'm seeing here in the stock market. I posted a chart of the Dow Jones Industrial Average, as you can see on a daily chart. Those are the ABCDs that I'm looking at. And, of course, we have that 1, 2, 3, 5 expanding triangle. We haven't made a new high in the Dow Jones Industrial, but we certainly could. But we're seeing divergences across the board in other things. In 2009, in March, folks, I was calling for one of the I actually said it would be the biggest rally since 1938. I didn't realize it was going to go up for 9 years, but this is the type of move that is very, very important, because there's no one out there that is really thinking anything other than a correction, and this could be something really, really big. These are huge patterns that we're looking at, folks. So I respect them. You know, they're going to fail, of course, but keep an eye on them, because if it starts to work, then you want to pay attention. Any move down now of 300 points, if we take out those lows of Friday, we're going to be looking at some pretty serious corrections that could catch some people by surprise. The news behind it could be anything. You know, we really don't know. But, you know, the good part is nobody else does either. So that's what we want to keep in mind. Remember, we're going to have Stan Harley as my guest on Thursday, and we certainly don't want to miss him. Also, Bitcoin had a really nice rally here. We got up to about 7,000. It really needs to get above that 8,200 level for the trend to go higher, but we still believe that we're looking for a market in Bitcoin or cryptocurrencies to come down to that $4,000 share mark. There was a special report, of course, on the, hold on, our beeper's going off here. Let's see, maybe something's telling us that we're looking at. There's our euro getting up to that price we were looking at, folks, 117.32. So we're right up there right now, so pay really close attention to that one. That may or may not mean something, but it's there where it's supposed to be. So let's see what goes on. We're very, very close in the Canadian dollar. We're only about 15 pips away. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!